Hi friends, topic for today's discussion is fictitious assets. At the end of this lecture, you will be able to understand the concept of fictitious assets, what are the various examples of fictitious assets and why they are known as fictitious assets. To get more videos related to the commerce topic, subscribe to our channel for free on YouTube. Okay, so topic for today's discussion is fictitious assets. Basically, the meaning of the word fictitious is imaginary. So, meaning of the word fictitious is imaginary. It means fictitious assets are not real assets. They are imaginary assets. Okay, to understand the concept of fictitious assets, let us see this form of balance sheet. With the help of this horizontal form of balance sheet, we are going to understand the concept of fictitious assets and why those assets are known as fictitious assets and what are the various examples of fictitious assets. Okay, so this is the horizontal form of balance sheet. Here some typical or some common liabilities have been recorded on the left hand side of the balance sheet and various assets or various common assets have been recorded on the right side of the balance sheet. To understand the concept of fictitious assets, we have to take one example. Okay, suppose I have a plan and I want to start or establish a one company. Okay. I want to establish a company. For that purpose, I have to raise capital from the public and do various activities, preliminary activities related to the formation of the business. Okay, so now I have planned and I want to form a company. I have made various estimations and I have decided that I need a capital of rupees 1 lakh and I want to raise that capital by issuing a shares to the public or to the investors. But as I am not a well-known industrialist or businessman like Tata or Ambani or Birla, there will be hurdles to raise the required capital for me. Okay. There may be situation that no one is ready to buy the shares of my company. Okay. For that purpose, I can offer my shares at the discounted price as well. Okay. So suppose now I have to raise the capital of rupees 1 lakh. I want to raise the capital of rupees 1 lakh by issuing the shares and share price of one share of my company is rupees suppose 100. It means price of one share is rupees 100. So basically I am going to issue 1000 shares to the public. So I have to issue 1000 shares of rupees 100 each to the public. So I have this plan. I am going to issue or my company is going to issue 1000 shares of rupees 100 each to the public. Okay, so this is my plan. As I'm in my company is new one and I'm not a well-known industrialist or businessman, I have to issue or offer my shares at discounted price to the public. Okay, so I'm offering or my company is offering 10% discount on the issue price of shares. Okay, so basically I have planned to sold 1000 shares of rupees 100 each. Face value of one share is rupees 100 each, but I am offering a 10% discount on the face value of my share. Okay, so here after selling the 1000 shares at rupees 100 each, I must receive the capital of rupees 1 lakh, but actually I am selling my shares at discounted price of rupees 10, it means I am selling my share at rupees 90 per shares, and that's why I will get the capital or cash of rupees 90,000 against the share capital of rupees 1 lakh. Okay, so this is a situation, and now I have to show this information on in the balance sheet of my company. Okay, so I can show this information like this: as I have issued 1000 shares of rupees 100 each. Share capital of my company is 1 lakh, because share capital has to be shown at the face value of the shares. Okay, but actually I have received rupees 90,000 because I sold my shares at the discounted price. So cash balance or bank balance with my company will be 90,000 only. And as I have sold the shares at discounted price, that is issue on shares, discount on issue of shares is required to be shown on the asset side of the balance sheet under the title of miscellaneous expenditure, and this miscellaneous expenditure are basically the fictitious assets of the business. Okay, so here is the so this is the situation of our company, that we have share capital of rupees 1 lakh, but we have received the amount of 90,000 against the issue of shares, and we have to record the amount of discount on issue of shares under the title miscellaneous expenditure, which is basically a fictitious assets. Okay, so here I will record the amount of discount on issue of shares 10,000. Okay. Then only this balance sheet will get valid. Okay, fine, fine. So in this way, fictitious assets get created. Okay. And as this discount on issue of shares is actually a loss of business, it's not a assets of the business. Basically, it is a loss of business. Still, we have shown this as a assets or in the assets. Therefore, this assets is known as fictitious assets or imaginary assets, which is not real one. Okay, let us see one more example of fictitious assets. Okay, now as I have raised the required share capital, but at the discounted price, I have raised the 90,000 rupees by issuing shares to the public. Now I want to start business activities. Okay, now I want to start business activities. For that purpose, I need to incur certain preliminary expenses related to the formation of the company. Suppose I incurred rupees 5,000 as a preliminary expenses. Okay, I incurred rupees 5,000 as a preliminary expenses. Okay, so I have to incur this balance of rupees 5,000 from the available cash of the business or the company. Okay, it means out of this 90,000, I am going to use this 5,000. Out of this 90,000, I am going to use 5,000 rupees for preliminary expenses. It means cash or bank balance will get reduced by rupees 5,000, and balance will remain after subtracting 5,000 rupees from 90,000. Cash balance will be rupees 85,000, and as these preliminary expenses are one-time expenses incurred in the lifetime of the company, these expenses are also initially shown under the head miscellaneous expenditure, and those expenditure are written off over the period of time. Okay, so here I have to record these preliminary expenses under the head miscellaneous expenditure, which is actually a fictitious assets. So preliminary expenses I have to record here 5,000. Okay. Then and then will only my balance sheet will get tallied. In this way, fictitious assets get created, and those fictitious assets have to be written off over the period of time. Okay, lifetime. Preliminary expenses or formation expenses are the similar in the nature. Okay. Next, miscellaneous expenditure is that underwriters commissions. This commission has to be incurred on the issue of shares if we want to insure or issue. In that case, we have to incur this underwriter commission. Okay. So these types of expenses get created over the period of time. Okay, to understand the concept of fictitious assets in detail, let us see the development of my company or my business. As I have started this business with issuing 1 lakh rupees of share capital, and I have issue shares at a discounted price. Therefore, I have discount on issue of shares as a fictitious assets. I have incurred rupees 5,000 as a preliminary expenses, and now I have 85,000 of rupees as a cash balance. Out of 85,000 rupees, now if I want to buy a land and building for business, now I am going to buy a land and building of rupees 15,000. Suppose I have to spend 15,000 on land and building. It means out of 85,000 I am going to use 15,000 to buy the land and building. Okay, so here I bought the land and building for rupees 50,000. Therefore, the balance of cash will get reduced to the 85,000 रुपीज बैलेंस था, उसमें से 15,000 यूज किए हमने, तो 70,000 बैलेंस बचेगा कैश और बैंक बैलेंस में. मेरे पास 70,000 का बैलेंस बचेगा. ठीक है. एज आई हैव परचेज लैंड एंड बिल्डिंग, नाउ आई वांट टू मेक सम फर्नीचर इन माय बिजनेस, सो आई यूज 10,000 रुपीज मोर फॉर फर्नीचर. Here I am using 10,000 rupees to buy furniture. I am showing these steps in this balance sheet in order to explain how assets get created and how liabilities get created. If at this position, at this stage, you will see the financial position of business, you will notice that business has liabilities of rupees 1 lakh and assets of rupees 1 lakh, that is 10 plus 15, 25 plus 5, 30, 30 plus 60, 90, 90 plus 10, 1 lakh rupees. Okay, so I am here explaining that how various assets get created, and along with this how fictitious assets get created and why they are known as fictitious assets. Okay, fine. Now this is the present position of the business, and now my business want to purchase few raw materials. So now as my business has established, and now I want to purchase raw material on credit from the market. In that case, what will happen if I purchase the goods or material on credit from the market? Let us see, let us assume that we have purchased the goods worth rupees 50,000 on credit in the market. So creditors will get created. Creditors, as we have purchased the material on credit basis, the creditor will get created, and I have stock of rupees 50,000 similar. Okay, so in this transaction, one liability is created against one asset. Okay. In this way, assets and liabilities get created. Okay, fine. Okay, now this is the financial position of my business on a particular date. Here, now I'm going to launch a new product, and for that purpose, I have to incur heavy expenditures on advertisement of the product. Okay, so I'm ready to uh, spend rupees 20,000 on advertisement. Okay. Here I am ready to spend rupees 20,000 on advertisement. But benefit of this expenditure on advertisement is to get over next 4 years. Okay, at present I am ready to spend 20,000 on the advertisement of product, but benefit of that advertisement get by the business over next 4 years. Okay, in that case, what will you do? Instead of charging whole advertisement expenditure for the 1 year, I will show this expenditure under the head miscellaneous expenditure, and will return of this advertisement expenditure in next 4 years. It means if I am getting the benefit of this 20,000 for next 4 years, it means I will charge rupees 5,000 for every year in the profit and loss account, and every year balance of that advertisement expenditure will get reduced in the balance sheet. Okay, so suppose I am ready to incur 20,000 as an advertisement expenditure. Benefit of this expenditure is going to be get by business in next 4 years. In that case, this expenditure will shown as a deferred advertisement expenditure in the miscellaneous expenditure, which is actually a fictitious assets. Okay, which is actually a fictitious asset. Okay, so out of this 60,000, I have spent 20,000 on advertisement expenditure. Okay, fine. In this way, fictitious assets get created. Okay. So basically, fictitious assets are, so in this case, deferred advertisement expenses will be shown as a miscellaneous expenditure in the asset side, which is actually a fictitious assets. But benefit of this expenditure is going to be get over the period of time. Therefore, this expenditure are known as deferred revenue expenditure. Okay, and these are shown as a fictitious assets on the asset side of the balance sheet. Okay. In this way, certain fictitious assets get created. Okay, as we have seen discount on issue of shares, and let us see the profit and loss account. Okay, okay, now as my business is growing, and now various business activities are taking place. Okay, various business activities are taking place. I am selling the goods on credit to the, or credit or cash. Suppose out of 50,000, this 50,000 stock, which includes raw material as well as finished goods, I sold out 30,000 of cash, 30,000 of goods. Okay. If I sold out 30,000 of stock for rupees 35,000, this is the cost price of bill, and this is the selling price of that stock. It means goods worth rupees 30,000 is being sold at rupees 35,000. Here clearly the business is getting the profit of rupees 5,000. If this transaction took place, the balance sheet will appear as like as 30,000 is stock of 30,000 is decreasing, therefore stock of 20,000 will remain with the business, and if we sold out the whole stock for cash, then cash will increase by rupees 30,000 and balance of cash account will be 75,000 high. And if you observe here, the amount of assets will be more than amount of liabilities. So total liabilities are 1,50,000 and here total assets are 75 plus 5 80, 80 plus 21 lakh, 1,10,000, 1,10,000 plus 20,000, 1,30,000, 1,40,000 and 1,50,000. It means total of assets is 1,55,000. So basically that 5,000 rupees is a profit to the business, and this profit can be shown on the liability side of the balance sheet as a profit and loss account. Okay. Similarly, if business incurs the loss or heavy losses, in that case profit and loss account shows the debit balance, and in that case balance of profit and loss account debit balance is shown on the asset side of the business, which is also a fictitious asset, which is not real assets. Okay, so fictitious assets is basically not real assets. We can classify the assets of the business into three categories as fixed assets, current assets and fictitious assets. Fixed assets includes those fixed assets which are purchased by business to get the benefit over a longer period of time, like land and building, furniture, and as goodwill is an intangible assets but it is considered as a fixed assets. Second type is current assets, stock, debtors, bills receivable, cash and bank balance, prepaid expenses, etc. are considered as current assets of the business, and miscellaneous expenditure which are not actually assets of the business are considered as the fictitious assets of the business. Examples of fictitious assets are like preliminary expenses, formation expenses, underwriters commissions, deferred advertisement expenditure or any other expenditure which is deferred revenue expenditure in nature. Then discount on issue of shares and debentures, and debit balance of profit and loss account. All these items are considered as the fictitious assets or fictitious assets of the business. So, fictitious assets are those assets which do not have physical form and real value. These assets are basically revenue expenditure in the nature of capital expenditure. The benefit of these types of revenue expenditure is get by business over a longer period of time. Therefore, these types of expenditure are also known as deferred revenue expenditure. The main objective of creating fictitious asset is to account for those expenses which cannot be recorded under normal category of accounts. Thank you friends, thanks for watching. To get more videos on the commerce related topics, subscribe to our channel for free on YouTube, and to support us, share and like our videos. Thank you friends, thanks for watching.